You may have heard about contracts for difference, or CFDs, that they carry additional risk but can work well for the agile short-term trader. You know the type, fast movers, even faster thinkers. But you might not know what's involved or how they work at their core. Let's dive in. In a nutshell, CFDs are contracts that pay the difference in the price between the opening and closing of a trade. What makes CFDs unique is that the trader doesn't own the underlying asset. Instead, they use borrowed money to place the trade on that asset, believing its price will follow a certain course. This is called leverage. Now, leverage carries increased risk if the trader does not account for position size, but generally speaking, regardless of whether the trader is looking at equities, indices, commodities, forex, or even crypto in some parts of the world, leverage is the very thing that sees them gravitate to CFDs over other tradable instruments. Technically speaking, leverage is a function of the margin you put down to facilitate the trade, where margin is the amount of money that you need in your account to open or maintain a position and represents a buffer against potential loss on a trade. Trading on margin means that you can have the full market exposure by depositing only a fraction of the trade's total value. Let's say Dina wanted to open a buy trade with 30-to-1 leverage. The USD notional or face value of this trade is $100,000. So in this instance, the margin required is $3,333. Without leverage, Dina would have needed $100,000 to be able to open such a position. Understanding how leverage can influence your strategy is fundamental to trading. We can adjust the degree of leverage depending on our risk profile and volatility in the market, as well as whether we use a pro or retail account. But as a general view, leverage may fit the needs of some traders, especially for those whose strategy may require multiple positions at once or who have smaller account balances but still want the freedom to trade the world's financial markets. Check out our website for margin requirements of different trading instruments or try the demo to see how leverage can change the way you trade.